Hey everyone, watch Corporate Decoder. Today VOR has filed a current report on Form 8, revealing key votes from their shareholder meeting and changes to their stock incentive plan. Quick note, this is not financial advice, just my take on public filings for educational purposes. The main story here is shareholder approval for a new equity incentive plan and their director elections that will shape the company's future. Alright, let's dive into what happened with VOR Biopharma Incorporated on the 11th of June 2026. So the company's board of directors made a pretty significant move by amending and restating their 2021 equity incentive plan. This plan is basically how they give out stock options and other stock-based rewards to their employees and executives. Now this plan has this cool feature called the Evergreen Provision. It automatically adds more shares to the plan every year. On the 1st of January, this is to make sure there are always enough shares available for future awards. This provision was set to continue until 2035. But here is the key change. The company amended this Evergreen Provision. The previous version added shares based only on the common stock already issued and outstanding. Now, it will be based on the total of issued and outstanding common stock plus any shares that could be issued if certain warrants are exercised. This means potentially more shares will be added to the pool over time, which could lead to more stock-based compensation. Another important update to the plan is regarding what happens when an employee passes away if an employee holding unvested stock awards dies. Their awards will now automatically become fully vested. This is a change that provides more immediate benefit to the estate of a deceased employee. And this amended plan was put to a vote at the shareholders meeting on the 11th of June, and good news for the company, the shareholders approved it. Now let's look at how the shareholders voted on everything at that annual meeting. About 62.77% of the company's voting stock was represented at the meeting, which is a pretty good turnout, suggesting a decent level of shareholder engagement. The first proposal was to elect two new directors, Andrew Levin and Fuad Namouni, were elected to serve until the 2029 shareholder meeting. Andrew Levin received a solid majority of votes for his election. Fuad Namouni also received a majority of votes for his election. This was the big one, the approval of the amended equity incentive plan. We already know it passed, but let's see the numbers. Over 20 million shares voted in favor of the plan. This shows strong support from shareholders for the company's approach to long-term employee incentives. About 6.7 million shares voted against it, while a significant number, it is clearly outweighed by the votes in favor. And a very small number of shares abstained from voting. There were also over 7 million broker non-votes. These happen when a broker holds shares for a client, but doesn't have instructions on how to vote them on a particular proposal. So these shares don't count for or against the vote. The third proposal was to ratify the choice of Ernst & Young LLP as the company's independent auditors for 2026. And this passed overwhelmingly with over 33.8 million votes in favor. This is standard practice and provides confidence in the company's financial reporting. Finally, the report includes some exhibits. Exhibit 10.1 is the actual text of the amended and restated 2021 equity incentive plan. This is where all the details are, but it is usually a very long legal document looking at the external context for Biopharma. Incorporated is a healthcare biotech company with a market cap of around $744 million and about 76 employees. The stock has seen some volatility this past year, trading between $3.64 and $65.80. It's interesting to note that institutionals like TCG Crossover Management and Rye Capital Management hold significant portions of the company's stock. It seems they are actively engaged. Recent news also mentions directors receiving stock options, which ties directly into the equity incentive plan we just discussed, and there was some positive news about conditional approval for a drug called telitacicept for certain conditions, suggesting potential future revenue streams. Now, looking at this filing, the main takeaway is the shareholder approval of the amended equity incentive plan, the expansion of the Evergreen Provision to include pre-funded warrants means more shares could potentially be diluted in the future. This is something investors should keep an eye on, especially if the company needs more capital or plans extensive stock-based compensation. The election of directors is also important, as these individuals will guide the company's strategy going forward. The overwhelming ratification of the auditor is just a formality that reinforces trust in the financial statements. My biggest concern is the potential dilution from the expanded equity pool. Although it is designed to attract and retain talent if not managed carefully, it can significantly dilute existing shareholders' value. What I am actually looking for next is how this expanded pool is used and what the impact is on the company earnings. Purse hair over the next few years, I will be watching how they deploy these incentives and if it translates into tangible business growth and shareholder value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take, stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe. For more deep dives, don't forget to check out the Discord in the description.